Good morning, traders, and happy Monday. Today is the 26th of August 2024. And starting off with the dollar index, it weakened before the weekend despite the earlier gains from the strong economic data. The upbeat US PMI figures highlighted a resilient services sector, initially boosting the dollar. However, it fell sharply after Federal Chairman Jerome Powell's speech at the Jackson Hole, where he indicated that the interest rate cut could start as early as September. The US dollar index dropped over 0.6% to 100.6, its lowest level in 8 months. Although the latest US data doesn't fully support a 50 basis point rate in September, the market expects a more dovish stance from the Fed. The dollar had briefly outperformed its rivals this last week, helped by a risk-off sentiment in the market. But Powell's speech is likely to keep the dollar bearish in the short term. The US dollar index posted its biggest daily drop since August early and has declined for 4 consecutive weeks, marking its largest monthly drop since November 2022. With support levels near 100.29 and 100, the dollar may face further challenges, especially as it approaches oversold conditions. A break below these levels could push the index down to 99.57, with any recovery likely limited by resistance at 101 and 101.59. And then for WTI, last week the crude oil prices dropped from 77.2 to 72.78, but rebounded above 76 by the week's end. Despite the recovery, the oil prices are expected to decline due to concerns about the slowing demand. US job cut and fears of recession in the world's largest oil consumer added worries about the China's economic slowdown, which is also hurting the oil prices. Additionally, the talks about the ceasefire of the Gaza has eased concerns about the Middle East supply disruption. However, a sharp drop in the US crude inventories and expectations for the Federal Reserve rate cut could limit the decline. Investors are also watching the OPEC for any changes to its production plans. Typically, the oil prices are under pressure despite a slight rebound. The key resistance levels are at 76.55 and 76.92 and 78.0. If the prices move higher, targets could reach 79.9 and 80 on the upside. Support levels are at 73.45, 72.62, 71.7, and 70. In the short term, the focus is likely to be on the downside. And then for gold, last week it surged to a new high of $2,531 after the Fed Jerome Powell hinted at the immediate rate cut, which led to a sharp drop for the US dollar index. Although the gold prices dipped last week, they managed to stay above the key level of 2,500 before the weekend. Lower US Treasury yields and continued pressure on the US dollar helped gold to maintain its bullish momentum. Typically, the 14-day RSI remains at 70, showing a strong bullish sentiment. The 2,500 level is a crucial support. If the gold holds above it, the resistance targets include 2,531.7, 2,551.1, and 2,575. If it fails to stay above 2,500, support levels to watch are 2484.5, 2456.2, and 245.2. Last week for AUD rose nearly 2% to 0.6798, forming a double top with its July high. The Australian dollar strengthened as the US dollar weakened following the speech at the Jackson Hole from Chairman Jackson. Despite mixed signals from the Australian economy, the RBA cautious stance due to the high inflation continues to support the AUD. The RBA expects inflation to stay above its target until the end of 2025, indicating that the interest rates may remain high for some time. Additionally, China's recent property market support measures, though limited, provided some boost to the AUD due to Australia's close economic ties with China. Technically, the AUD-USD recent breakout above key resistance levels at 0.66 and 0.67 signals a bullish trend. Reports in the RSI is positive around 62, further supporting this outlook. If the pair breaks above the 0.6758 and 0.676, it could challenge to the year-to-date high of 0.68 and possibly reach to the December 2023 high of 0.6871. On the downside, the 0.67 level offers support with strong backing at 0.6607 and 66. These levels now act as a strong base for the pair. And that is all for today's daily analysis. Thank you for watching and happy trading.